So let's turn our focus to Cholamandalam Investments. That's the next company on our radar. Of course, we want to talk to Cholamandalam about the growth prospects from here. And the company has already clarified. I mean, the last couple of days were all about this Cobrapost report that came out flagging or alleging certain corporate governance issues. The company completely clarified, saying that all of this is completely baseless, and it gave a point-by-point rebuttal to a lot of these allegations that were raised. So we want to move beyond that, talk about the business at large and what's really driving sentiment as we get into 2026. And for that, we have with us Mr. Arul Selvan, President and CFO of Cholamandalam Investment and Finance. Mr. Selvan, thanks so much for joining in. Season's greetings to you. Thank you for joining in. Hope you're set to wind down a good year, because at least for the financial landscape, for banks, NBFCs, it has been a good year, I suppose. I mean, growth has not been too bad. Stock price performance has not been bad at all. So, I actually want to start on a broader note, on the sector note, and then we'll talk about Chola and what you see ahead. This year will be remembered as a year for perhaps seeing the maximum foreign interest that we've seen in Indian lenders in a long, long time. Capital has been pouring in left, right, and center. From the Middle East, from Japan, from other parts of the West as well. So I want to start right there. As you've seen a lot of these deals happen, a lot of them with your peer companies, what is the thought? I don't know if anyone's been approaching Chola. I don't know if you're thinking of shoring up your capital buffers at all at this point. But are you thinking more equity capital at all as we enter 2026? Are you going to be open to more deals if there are willing partners outside?
Yeah, morning. Certainly, we are open to any new interest in the company, but we always try to be self-sufficient. I mean, the philosophy within the company as well as within the group is that you have to fuel your own growth rather than keep looking at funding outside the system. This is what we try to do. We keep, I've already elaborated that if we grow at around 20 to 25% and we keep our pre-tax ROTA at around 3.5%, it is actually a good, refueling or the self-sufficient model, provided we don't go a little high on the dividend, which we never have gone to pay, exorbitant or high dividends.
But Mr. Selvan, you're saying that you would be open to conversations.
We are open to conversations as long as it provides a meaningful, a positive impact to the company. But we are right now not looking at any conversations at all.
So there are no current ongoing conversations, but you would be open to shoring up equity capital.
Yes, it is always a good thing to do. But as you know, I am the CFO and there are more people above me, board is there and others who will also have a say on this. But I know the sentiments that if required, there is always a positive, and there has been no resistance on bringing equity if the terms are good, and we have brought equity many times in the past. Over the last 15 years, I've been myself participating on many equity issuances, and we are open to it. That is
okay. You are open to it so long as it meets your internal benchmarks of growth, internal benchmarks of the quality of capital and the nature of the money, what the end use of that money would be, whether that enhances your cause, which is currently not particularly bad. I mean, with a 20-25% growth and the return ratios that you've set for yourself, you're self-sufficient, but a little bit of propellant would not be bad so long as it's the right fuel. Okay, you are the CFO, so let's talk about the businesses that you are looking at directly. Which segments do you believe that will need a bit of a push for disbursement? Because there's housing, home loans that have been a bit draggy, and then at the same time, the vehicle book, post GST cuts. How has that business panned out? So if you could give us some color on each of the segments that you are, disbursing loans to, and how the health of that underlying industry is, specifically speaking from your standpoint.
Yeah, actually, vehicles have started moving up. We are seeing disbursement growth in double digit, and we this quarter will be a good disbursement growth compared to the first two quarters. You will see the growth coming up in this quarter. LAP has always been growing, steadily at around 25 to 30%, and you will see the same 30% level of growth in LAP disbursements and LAP AUM. Home loan, which saw a little bit of a, moderation in Q1 and Q2 because of various issues which we had discussed, will again show growth in this quarter, and you will see the growth coming in the home loan segment also. And the SME and the CSEL, as we have spoken earlier, we are doing some corrections in this. While in the SME, we have reduced the supply chain finance. So the disbursement numbers may still look little lower, but AUM growth will be there. CSEL, or which is our unsecured funding book, will also show growth, but it will be moderate as compared to the previous years. SBPL will show a good growth, about 30% plus. So we see overall a good traction, and we see 2026 also to be more positive,
Right.
especially Q4 will be more positive.
Could you
We have
give
to
us
see.
some numbers to quantify that? Because the second half of this year, the street really wants to know what's the kind of disbursement outlook that you have for the second half of this year. And if you could give us an AUM target by the end of this year and by the end of FY27 as well.
Yeah, right now I'm not moderating any of the AUM target. See,
Okay.
AUM is something which is like an elephant. It moves slowly. Disbursement will move, when disbursements slow down, AUM did not get impacted. Same way when disbursements, grows faster, within 1 or 2 quarters, it will not show immediate impact. So we still would like to retain our outlook conservatively in the 20 to 23% growth levels on the AUM for the full year of 26. And 27 is a little far away. We need to see the impact of the H1 of 27 to understand how the seasonality plays out for the year 27. But right now, outlook is little positive, but it is little too premature to commit any growth numbers out
So
there. But
will 20% plus disbursement happen in the second half? Because, for you to
in the
achieve 20%
second
AUM
half,
growth, you will
we
have
will
to.
certainly clock anywhere above 15% overall growth in disbursement. 15 to 20% certainly will happen in the second half. On disbursement, AUM will be in the 20 to 23% year on year at any point in time. And 27, we will see similar 20% plus growth on AUM. Right now, that is what I would like to keep it at. And then we will see as we go closer to the 27 financial year.
Right. Mrs. Selvan, good morning. Prashant here. Season's greetings, sir. Just a quick question. I mean, there was a big difference in cost of funds between you and Shriram Finance. With this big deal, their cost of funds are expected to come down sharply. Do you expect, in specific segments, increased competitive intensity?
See, we and Shriram play in different segments actually. We are, in new and even in the used segment, what we play is the used vehicles which are less than 10 years on maturity after our loan expires. Well, Shriram plays more in the little longer used vehicle segment. We need to wait and watch how they would which markets they would like to enter, post this new money that has come in, and what is the direction MUFG sets them to move forward in. I don't think that would be a big impact for us in ways of our growth. And today we are not necessarily focused only on vehicle finance. We have grown books in other parts of the business, so we are not unduly concerned about it.
Unduly concerned, but yeah, vehicle finance is perhaps one area. But I mean, we got most NBFCs now not as, sector champions, but also doing many other things, right? Like you, and of course, Shriram now also is doing other things, and perhaps will do more things with this capital infusion. Sir, just a quick point. Actually, two questions. MSME loans are doing very well. there was a CRIF high-mark report which said that, the expectation is that because it's a segment which is doing quite well, public sector banks which over the last 3-4 quarters have lost share in this segment, and this is a segment growing north of 17, 18%, competitive intensity in this space is going to pick up quite a bit. For you, I think you classify this under this new business segment, right? CSEL and SME, MSME, etc. all together. It's about 12-15% of your assets. Do you expect increased competitive pressure here?
See, the CSCL is doing the unsecured segment of the MSME market, and the SME segment does the secured segment of it. These two, as of now, as you rightly said, is overall in the range of around 15% of our portfolio. We may see some impact on the banks coming in, but I think the customer profile, what the banks targets versus the customer profile we work on are completely different. So I don't see the overlap happening between banks and us. The banks are on a larger ticket size while we are on a slightly smaller ticket size. So we don't see this to be of a significant impact to us. Again, we'll wait and watch. Actually, see, SME segment is not such a high profitability segment. It runs on a very tight rota. But the cost of fund reduction would help compete in this segment. So we will certainly try and assess where we need to, make ingress into these markets.
So, Mr. Selvan, just one last question from my side. What's the big, if I can, how do I frame this? What's from a banking and a finance perspective, from your business perspective, right? Everybody's focused on disbursement growth and, the usual things. What, to your mind, what's the one big enduring theme, if there is one, for 2026 going to be, sir? What should investors really stay focused on?
See, always investors' focus is and will continue to be on profitable growth. Growth by alone will not make meaningful impact. Maybe in the short term it's okay, but in the long run it needs to be a profitable growth. That's what we focus on always. Like we want to do and grow segments which are profitable and will also has the potential to keep growing at a pace which is consistent, and so there is no yo-yoing in our performance, whether it is with regard to growth, with regard to NCL, with regard to profitability. So keep the expectations of the investors at a moderate pace and keep delivering them consistently. If we maintain this formula, I think investors would like us and
Sure.
trust us.
No, absolutely. And on growth, you've already reiterated your earlier promise that it will be more than 20%. Very quickly to round up the conversation, sir, when we earlier spoke, you told us that in the second half, your margins should start improving. I think the guidance has been about 10 to 15 basis points. And you had also told us that credit costs should actually come down. Now, off and on, we keep getting conflicting reports. When I spoke to some people who said that microfinance stress and unsecured stress is not entirely out of the system as yet. So just if you could revisit the asset quality and credit cost guidance, and also, margins, if indeed you see this margin expansion playing out in the second half.
Yeah, we will see. Thankfully, we don't have microfinance as a segment in our portfolio. Neither our unsecured segment is a large portfolio. We have seen certain stress in the unsecured because of the fintech exposure, which I'm sure it will run down completely, or I would say almost 90% of it would get run down by the end of this financial year. So with Q4, the fintech portion of the unsecured exposure will run down. The rest of the portfolio on the unsecured is running fairly good, and we should see positive impact on that. NCL will come down and NIMs will improve. I'm confident about it. We will have to, so there should be a positive impact on the PBT rota.
Okay. All right, Mr. Selvan, we will leave it on that note. Thank you very much. You're sounding as confident as ever. Let's take this opportunity of wishing you, your teams, your family, everybody at home, a very, very happy new year. May it be a happy, healthy and prosperous 2026.
Thank you, and wishing you the same. Thank you.
Yeah. Thank you so much. We'll take a quick break on that note.